Welcome everyone to our discussion today on the rising importance of ESG reporting in the real estate landscape. Joining us are our esteemed guests, Dan Winters from the Global Real Estate Sustainability Benchmark and Wes Fitch from Schneider Electric. I'm Erika Hornok, Senior Manager at Schneider Electric, and I will be your host today. So in today's episode, we will discuss the latest reporting patterns in the real estate sector. We will see what the Global Real Estate Sustainability Benchmark, or GRESB, results can tell us, and we'll touch on practical topics around ESG reporting. But first, I would let our guests briefly introduce themselves.
Erika, thank you so much for having me. Greetings, everybody. I'm Dan Winters, Senior Director at GRESB. We're the Global Real Estate Sustainability Benchmark, started in 2009 by a handful of institutional investors who got together coming out of the great financial crisis and very simply said, we can do better. From this, a series of questions and ESG due diligence questionnaire was created, and we have seen uninterrupted growth for 14 straight years. It's a team effort for sure. We have many partners out there, including Schneider Electric. Thank you for everything that you've been doing to drive this industry forward. Partners in progress for sure.
Thank you, Dan. And Wes, if you could share a couple of words of yourself.
Of course. Thank you, Erika. Hi, everybody. My name is Wes Fitch. I'm a sustainability consultant with Schneider Electric, and I've supported several real estate clients with their GRESB submissions and even implementation. I'm excited to join the conversation and share some of my experiences and insights.
Thank you both for being here. So the latest GRESB public results were released on the 17th of October, and they provide some really fascinating insights into the state of sustainability in the global real estate sector. But before diving into the details, however, and for those who have just put GRESB on their radars, really, then would you provide a brief overview of the benchmark and its growing significance in the real estate industry?
Absolutely. So GRESB has been benchmarking the real estate and infrastructure asset classes going back to 2009. These are real assets, investments that you can't pick up and move. So that's one thing that binds us together. It's first and second order material issues that matter to pension plans and investing in funds. So that's the second key idea with GRESB. And we do this on an annual basis. So what we have is we've got a portal. This opens up on April 1st. And private equity firms and listed REITs around the globe get into that portal and they start to complete their GRESB assessment. Questions that are set up in components, aspects, and indicators. The components are the management component and the performance component. We also have a development component. These are the major buckets that then bin out what I call themes, which are in GRESB speak, aspects. And those themes then are broken down into indicators, question by question. What are you doing in a plan, do, check, act, ISO 14001 approach? All of these issues are tailored for institutional real estate, all the questions that are in GRESB, and the assessment is due on July 1st. So over 90 days during the second quarter, organizations are looking for policies and procedures that they have to upload as evidence for the questions that they're answering. And then the most difficult challenge is, can you acquire the energy, water, waste, and greenhouse gas emission data for your entire portfolio? Could be easy if you've got a portfolio of 5 buildings. Very, very difficult if you're a really big private equity fund that has hundreds of buildings, of which many of them in the U.S. have. So all told, here in 2023, we had 2,084 submissions to the benchmark. These are portfolios. And the portfolios have a lot of buildings, 170,000 buildings in 70 different countries. It's been a big, strong year. And then on October 1st is when we release individual benchmark reports along with the aggregated results that you've referenced. So October 1st is a really big day for us. And ultimately, peer benchmarking creates a competitive race to the top. We've seen this year on year on year. Organizations get their score and they're like, okay, this is great. We've made good progress this year. Let's get better. And so they do. That's the essence of GRESB, and I'm sure that we'll talk about those a little bit further on in the podcast.
Absolutely. Thank you for this overview, Dan. What would you say that today are the most important drivers behind the adoption of GRESB reporting by the real estate companies?
It's a really interesting question. Last week, I was at the fall conference for PREA, the Pension Real Estate Association, and I gave a talk to 150 institutional investors. ESG 2023, what's up? The first and foremost thing that's up is interest by institutional investors in understanding the structured non-financial data and the contours around their investments. So LP interest is the key driver behind GRESB. People are doing their investments will complete a GRESB assessment because someone asked their investor relations group to do so. And it gives a deeper dive into what I mentioned, structured non-financial data that goes to inform the risk contours and how the financials came about. So other things that are up besides LP interest, scores are up. And the scores are done by the REITs and the private equity firms. So those scores continue to increase as a cohort year on year on year. Net zero commitments are up. The number of benchmark members are up. A lot of good news happening in institutional real estate when it comes to ESG.
Thanks, Dan. And talking about scores and good news, and by this, shifting to the results, could you share some outstanding trends or insights from the 2023 GRESB results that we're highlighting? I'm sure our listeners would be interested to know what sort of patterns have emerged and what they could mean for the industry going forward.
Well, I mentioned net zero targets. I think that is by far the story of 2023. We saw science-based targets talked about at our 2022 results events, and now those words are being put into action. So the numbers in the benchmark are closing in on 50% that have targets that are beyond IRR and NPV targets. Those are financial targets. Now there are net zero targets. There are greenhouse gas emission reduction targets by these major portfolios. That's great news. Canada's coming on strong. They have net zero plans. They've put their asset managers on notice. We need a net zero plan, building by building by building by the year end 2024. Electrification. How do we get there? They are doing this because around the world, there are 73 places where there's a price on carbon. Canada is one of those. Their price this year in 2023, $65 a ton. 2024, it's going to go up 15 to 80. And year on year, another $15 all the way to 2030 when that carbon price is $170 a ton. With a price, you can set a net zero target and you can make assumptions and progress to put together a plan to be ready in 2025, 6, 7, 8 when interventions can happen because tenants are moving out, CapEx needs to be deployed. That is a really, really big trend. They're catching up to Australia. The Australians are the perpetual leaders in the GRESB benchmark, but boy, it's narrowing. And then ultimately, the cohort starting levels, a real interesting phenomenon happened this year. The starting score for the cohort that joined GRESB in 2023 decreased. And what did that mean? That means that there was this idea out there about getting GRESB ready, and I start thinking about it in 2021, and then I start maybe doing a shadow thing in 2022 to step into the benchmark in 2023. Well, no. Right now, the urgency has increased, and people are just getting going. ESG competes with inertia, busting through inertia and moving forward. And I am confident Wes is going to talk about that in a second, right? But we're seeing it in the data. Those scores are down initially. And what will happen next year is those scores are going to jump. It happens year on year on year.
Thanks, Dan. I think you raised really important points there. So the facts and the stats are clearly showing that sustainability reporting and actions are maintaining momentum in the real estate sector. And we have also seen many new responses this year too. Still, to your point, I think it's worth focusing on those as well who are new to this journey or haven't even started it yet. Why should the real estate operators, even those who are not planning yet to submit to GRESB, be keen to observe these unfolding trends? What are your thoughts here on this, Wes?
Yeah, as the adoption of GRESB grows amongst real estate asset managers and their investors, for all the reasons Dan previously outlined, operators should expect increased pressure and even requirements to collect the necessary performance data, conduct the technical assessments, implement efficiency measures, pursue building certifications, and more. We've already heard this amongst some of our operator customers and have even developed a service to support them. Not only will operators face these enhanced expectations, but ownership entities will begin to favor those whose ESG performance, participation, and collaboration are aligned with their own reporting requirements, assuming, of course, fiduciary obligations are also met. I've experienced this firsthand. While many operators may view modification to intensifying ESG requirements as a burden of doing business, what I'd like to highlight is that there is a serious opportunity for operators to demonstrate leadership and potentially even gain a competitive advantage amongst their peers by staying ahead of the curve and being proactive about their investors' evolving needs, even if they aren't submitting to GRESB themselves.
All right. So in terms of opportunities, there is clearly a compelling story as to why you should start reporting. However, I feel and also hear from our clients sometimes that are new to this realm that taking those first steps are not necessarily easy and may lead to certain companies further delaying this decision to even start this practice. What are these most common challenges that operators experience when aiming to meet ownership requirements? Wes, I would like to hear your reflections here.
Yeah, thanks, Erika. Yeah, there's several common struggles for operators who have ownership requirements related to GRESB. The big one's data collection. Energy, water, waste, emissions, efficiency projects, technical assessments, building certifications, etc. Undeniably, there's a lot of data to collect. And it can often exist across several departments: finance, procurement, operations, and more. Pair this decentralization with often a lack of dedicated internal resources to take ownership of compiling and organizing ESG data, and there are bound to be difficulties. Not only this, but particularly in the US, the common contractual instrument for lease agreements is the triple net lease, which can place huge limitations on the availability, access, and timeliness of data because it's ultimately up to the tenant's discretion and even preference to provide it. In some cases, I've seen operators end up as the intermediary of data between ownership and tenants, which can be a precarious situation to say the least.
Let's look at what's happening on the ground. We've got institutional investors that would like to do a carbon footprint of their entire portfolio. Financed emissions. How do we tackle something like that? Well, the first thing they need to do is understand what they own. They might own pieces of funds. Those funds invest in whole or pieces of buildings. So now you've got the hunt for data. And once that happens, you're trying to elevate energy, water, waste, GHG, in order to satisfy your client, which is looking to understand their financed emissions. Many of these folks have made net zero commitments, 2050, 2045, 2040 or sooner. And I'm not talking about the major pension plans around the globe. So if they're going to meet their commitments, this is where the pressure is coming from to push down all the way to the building level to elevate those metrics that matter. That's the dynamic that's new, that's happening. Organizations are equipped to deliver the financials, a little bit less equipped when it comes to tracking and elevating consumption data and other metrics that matter to inform risk. The good news is that the industry has improved dramatically over the past 14 years, and it's really accelerating on these issues.
Thanks, Dan. Beyond the ongoing challenges, and I wonder and keep thinking of those who are new to this scheme and may think that they are exposed when they are starting disclosing their information. What would be your recommendation for these newbies then? What would be those first steps?
Well, let's start with the fact that the worst GRESB score you can get is a 0. So get in the benchmark. What happens is organizations learn what they don't know. You're starting to learn a language, and it gets down to good, better, best practice on issues that matter to the institutional real estate industry globally. And first year, when you receive that score, sometimes it's not reflective of the mind's eye of what a company thinks of itself. But earlier, what Wes was describing were what I like to call random acts of sustainability. I am confident that every firm out there has them in their portfolio. It could be a LEED building over here, an Energy Star building over there, energy audits, maybe some renewable energy on some rooftops. Either way, what GRESB presents and what ESG is really all about is a communication opportunity. So communicate up to all the various stakeholders, where your capital comes from, the great things that you're doing is the objective, but it's difficult when you're trying to wrap your arm around an entire portfolio for the first year. It's typically 3 years before an organization really hits their stride within GRESB. That first score, sometimes it's in the 20s and the 30s, and they're going through what I like to nicely call the GRESB stages of grief. Shock, anger, sadness, and bargaining. But the next year, when that 20 turns into a 50, oh my goodness, they are on the road, and ESG has become a very welcoming, positive conversation. And the tone and tenor changes. By the time that you get to the third year, that score has gone up to 70, and boy, these organizations are on their way. So it's all about really understanding what you don't know and maintaining the momentum as you climb the ladder, as all of the other peers have done. The average score in GRESB is now in the mid-70s, but it takes several years to get there.
Thanks, Dan. I love your point around making this a journey and admitting that this is a journey for so many corporate, and almost no one starts with perfect data. But it's reporting is like a muscle. You exercise and you make it stronger and stronger. Wes, what is your view on the best practices for new and potentially ongoing submitters who look to enhance their GRESB reporting efforts?
I have a couple of recommendations. The first one is simple. For new submitters, take advantage of GRESB's grace period, which allows you to submit guilt-free. It's about getting familiar with the framework and seeing where there may be gaps, whether it be in your performance or in your data collection. Second, and more broadly, organizations need to develop robust data management strategies that leverage technology to collect, organize, and store ESG information. The best will have an internal resource or team dedicated to this, in addition to the advisors and consultants. Which brings me to my third recommendation. For organizations that do participate in GRESB, or any sustainability reporting framework really, and seek to improve their performance over time, it's critical to have somebody within the organization who can drive the implementation of improvements through the internal channels.
Thank you, Wes. And thank you both for this overview. I think this all sounds very encouraging, and hopefully our listeners feel better equipped as well to take that first step or enhance their capabilities and take their reporting to the next level. Before we part ways, though, then may I ask if there are any GRESB-specific news or updates we should look out for? Perhaps anything you can share from the roadmap?
Such a timely question. The GRESB Foundation released its roadmap just last week. I think the big changes that are happening, we talked a lot about net zero here, and net zero is a question within GRESB, and you'll note in 2023 it was unscored. That's always an indicator that scoring will be coming soon, and that will be next year. So we'll be introducing scoring for a net zero target setting. Some points will be associated with that particular theme. On the building certification side, it's been noted that certifications can age out. And so at what point in time does a certification from 2000, say 2, 3, or 4, the early years of LEED, or back in 1999, if you got a first Energy Star, is that still valid here in 2023 or 2024? So there will be some expiration around the building certifications, some little nuances about EV charging and how that energy consumption is tracked. And there's a lot of focus on the S, right? So we're expanding some indicator scopes to cover some strategies around advancing the S on the tenant side, as well as for the private equity firm itself. So those are the big things. You can go to this, it's on our homepage of our website. Take a look at that document, the standard changes for 2024, just released.
Thanks, Dan. Really insightful and indeed some clear directions what to look out for. Then, Wes, thank you so much for your time with us today. It's been really insightful conversation. Any final words as a takeaway to our listeners?
Final thought here. I've observed over my time at GRESB, which is now going on a decade, that the ESG capabilities within these firms as embodied in people is really increasing. So the level of aptitude, the level of focus, budget, integration into decision making. All of these things are really advancing. Change is upon us, and we're watching the industry, the institutional real estate industry and infrastructure globally, make these changes to integrate ESG best practices into their standard course of business. So for organizations that haven't been involved in benchmarking, we've got 14 years of track record. Get in there, see how you do. And there's no downside to that. And once you get in, you start to increase your game. Management introspection begets forward progress. Happens every time. There's 2,084 portfolios to prove it.
Yeah, Erika and Dan, you touched on this earlier, but I'd just like to emphasize that sustainability is a journey. It's not about where you start. There will be some complexities and challenges along the way, probably even some trade-offs. And you can't expect perfection overnight or over the course of a single reporting cycle in our case. It's often about the accumulation of marginal refinements over several years. Thank you, Erika, for hosting this discussion today. And thank you, Dan, for your participation and insightful commentary.
Thank you both for your time today. And to our listeners, thank you for joining us. Stay tuned for more discussions on important topics in the real estate industry and ESG reporting.